what's up everybody? Tyler here from Vant Trading, back at it again with another educational video. Today I'm going to be going over how you can add and incorporate RSI, the Relative Strength Index, into a strategy. My last video was, what RSI was, an informational video on how it's used. This one, backed by popular demand, is going to be a strategy video on how you can use it and incorporate it in your day trading. But first, if you haven't already, please hit that like button on the video and hit that big red subscribe button to see more videos like this in the future. All right, so there are a couple different ways you can use it into a strategy, and there's two ways I'm going to show you how to use it. The one that I use, and that's probably the best method, is how to use it with price divergence. And the second method that you can use it is for trend continuations, to where it hugs that overbought or oversold level the whole day, and it just continues its trend. So there's two different ways you can do it. My first way I'm going to show you how to do it is the divergences, right? And price divergence, what that is if RSI is making a lower high, so you have a high that's overbought, and you makes another lower high that's under the overbought level, then you want to look at price action. And if price action is doing the opposite, it's either making a higher high instead of a lower high, or even if it's making a flat top, like a double top, that's price divergence, because you have price making a higher high or a flat top, and then you have the RSI making a lower high. And here's one example of that, right? So you have the price right here that's making more or less a double top. And so you have this one high right there, and you have this second high right here. Well, if you take a look, you also have an RSI, this one high, and keep in mind this has to be overbought. This first high has to be overbought, and then this second high right here has to be under the overbought level. It has to be under that 70 level. Now, keep in mind, these strategies I'm showing you are my interpretation. There's many different ways that traders will trade, price divergences or see it differently. This is how I trade it and how it works for me. Just keep that in mind. But this second high, lower high, has to be below the 70 overbought level. And then there's two ways you can go about entering this trade. You don't want to just blindly buy or sell. What you're going to want to do is wait for, so what I would wait for is either wait for this bearish breakaway right here, some kind of bearish candlestick pattern, and then you would take a sell right there. Or if you want to use a moving average crossover incorporated with that, this is the 80 MA, and this is the 18 simple moving average. And you can wait for the crossover, right? So it crosses over right here, and then from there you would sell, I'm assuming right around here, and you'd still get that nice push down. So this is one example of a nice bearish divergence push down. And then we'll look at another example I had over here, and I'm showing you just a couple of the most obvious examples, just so you can get an idea of how it works. There are other ones that that are I guess you have to do a little more interpretation of, but I'm going to show you the obvious ones for now. This one right here, you have one high right here, and you have the second high up here. So this is making a higher high, right? Higher high in price. And if you look at RSI, you have the first high that's overbought at the 70, and you have the second high that's slightly under the 70 level. So it's more or less a lower high. If you want to call it a flat top, you can. But you got to notice that, well, price is clearly breaking up here, and RSI, if it's not a double top, it's slightly down. That's another indication of a bearish divergence. So in this case, what are you going to wait for? You're either waiting for this bearish engulfing candlestick right there, which is an indication to sell if you'd like to sell off of price action. Or if you want to wait for that moving average, you do weed off all of this consolidation here. So that moving average crosses over right there. So I'm assuming right around here at this close is where you're going to take that sell. And then you just ride this move right down to the down. So in order to find your take profit level, you can either ride it down to the oversold RSI, which would be right in that right there, and you'd catch this whole entire down move right there. And going back to the last example right here, same thing, ride it down to the next oversold area, which would be right here at the bottom of this move as well. Or if you don't want to do that, you could find another level of support, I guess in this case, where you could take profit at. So you could take profit right in this level of support here, or you can take profit right in here. So that's a couple of different ways to find a take profit. Let's go to another example really quick right here. All right, so another thing, you have this, you got to look at price action again. So it's creating this double bottom right in here. And if you look at RSI, you have this, let me move this over real quick. You have this first low right here that's being formed, that's oversold, and your second low right here that's above oversold, making a higher low. You have this low, and then you have this equal low right here, right? So that's divergence, that's bullish divergence in this case. Now, one thing you might notice is, look, Tyler, you have this oversold here, which is this low, and then this, you have a lower low here, but you have a higher low here. Yeah, but you got to realize that in order for it to be valid, the second low has to be above, in this case, above the oversold level. And this right here is actually below the 30, below the 30 oversold level. So that's not valid. So I wait, right? I wait. So this is now in case my first low. This is my second low, which is above the 30. So then, how do you trade it, right? Well, you either take it after this bullish engulfing right here, and my entry would be right there, or you wait for a crossover. And the moving average crossover was right here. So in that case, you're probably taking a buy right around here after at this candlestick, and then you can ride it up here. Now you can either take profit right in here at this level and here, or you can wait for some kind of overbought level, which it hasn't reached yet, because this happens to be today, and we'll see with that. So there's a couple different examples of the bullish or bearish RSI divergence and how you can trade it that way. I'm going to show you one more example of how you can do some type of trend continuation trading, and if you have like a trending day, then how can you trade a trending day? So let's kind of just pull up this day right here. So obviously you can see that this is completely just going up this one day and has no pullbacks, no nothing. And if you look at the RSI, it's hugging this overbought 70 level. How can you find entries on days like this? Well, what I like to do is I always have my 8 EMA up, exponential moving average. And if I'm looking at this trend continuation, well, I'm looking to buy on pullbacks of the RSI, right? And if the RSI is a pullback, that means that the price action will have a pullback as well. So if you take a look right in here, you have this one pullback, right? This pullback to the 8 EMA. And if you look at RSI is having a slight pullback as well, back into the underneath the overbought, underneath the 70 level. So what am I looking for? Again, you can't just blindly buy or sell. I can't blindly buy if it hit the 8 EMA. I have to wait until I see price confirmation, so kind of bullish price action. Once I see this this bullish engulfing right here over top right, rejecting that 8 EMA, and that's where I would buy to look for some kind of quick move up like this move right here. Right, so that's one example as well. Or if you take a look at this price action, this move right here is a little deeper of a pullback. And if you take a look at the price action, that's this down move right here. Now, if you notice, it moved below the 8 EMA. And so what I'm looking for here is a bullish close back through the 8 EMA. If this had continued down and did a bullish close, bullish engulfing below the 8 EMA, I wouldn't be interested because it needs to be above the 8 EMA to continue its bullish price action. So in this case, it ended up closing above the 8 EMA right away, with more or less this tweezer bottom here. So it's close enough for me, and that's probably where I would have taken my buy once it closed back across the ADMA to get this nice scalp up. So that's another example of how you can trade a trend continuation if you can't find any divergences. So you just gotta wait for these pullbacks, like right here, another pullback. And again, this is tweezer bottom, but I'm not trading that because it's below the ADMA. So if you look at it, after this bullish engulfing close through ADMA, that's where I'm taking my long right here, and I get this nice push up. So that's trend continuation trading right there with the relative strength index. That's really all. That's all there is to it. That's the only two things I like trading with RSI is the divergences or the trend continuation. There's many other ways you can trade RSI, but these are my interpretations and my two best trading strategies with the relative strength index. So that's really it. So just to recap, I had the 8 exponential moving average on the screen, and I had the 18 exponential, or the 18 simple moving average on the screen. And that's the crossover I would use for the divergences, and my RSI settings are just at the standard default 14, and the 70 level of overbought and the 30 level of oversold. That's how I trade it. That's it. I hope this helped. I hope this was informative for you. If you have any other questions about the strategy or want anything more in depth, please let me know. Reach out, put something in the comments, and I will get right back to you on that. Otherwise, make sure to hit that like button on the video and hit that big red subscribe button to see more videos like this in the future. Well, I'll leave you at that. Have a great rest of your trading year, month, day, whatever it may be. See ya.